Welcome back, everyone. In this video, I'm going to be talking you through the 3 ways that we can spot a strong level. So it's very, very easy to draw levels in the market. You can draw them absolutely everywhere. You can draw them from the tops here, all these highs and lows, support and resistance, supply and demand, market structure. There are a lot of ways to actually draw levels in the market, but how we then identify these levels as strong levels and levels that we could actually use is a different story. So I'm going to talk you through the 3 ways as a market structure trader that I identify a strong level. Now, the first one is through wicks. So wicks show us exhaustion in the market, they show us rejection in the market, and in doing this, this allows us to identify a level as strong. So for example, here we see some really, really big wicks here, and what these tell us, the psychology of a wick, it tells us that price has exhausted here because price attempted to push and then failed, dropping back down. And the fact that we now have multiple wicks as well as a big wick shows us, again, big exhaustion. So this is telling us, that this level is very, very strong. You can see it here again. And this level has been identified as strong and then re-identified as strong with further wicks to the right here. So wicks are the number one. We're going to see those through price action on the charts. Anyone can learn how to spot these. It's the simplest and most common way of noticing that a level is strong. Next, we have the freshness of a level. So this means basically whether or not a level has been tapped a ton of times. So sometimes in the market, you'll notice that price tends to tap levels a lot. So for example, here, this region or this level, yes, we had these big wicks, but then it taps it again. This is not a fresh level. It's been tapped, as you can see, 3, 4 times, 5, depending on if you count the wicks as well. It's been tapped a lot of times, basically. So sometimes, of course, these will still hold, but as a market structure trader, when we're talking about the freshness of a level, we want the level to be as fresh as possible because that is how we're trading the structure. Whereas when a level has been tapped a lot of times, you move more towards support and resistance, supply and demand trading rather than structure trading. So the freshness of a level, i.e., if it has been touched before, is very important. For example, as you see here, price was moving up. We formed these 2 highs, which you can see. Then price broke. This then becomes a freshly broken level, and then it retests nicely. You can see really clean retest with a wick, as we talked about with number 1, and then a push up. So the freshness of a level is really important when adjusting or when looking for the strength of a level. Now, the third and final one is starts of structural pushes. Now, this is a little more advanced, but it's very, very, very useful if you can get it into your arsenal and into your ideas. The start of a structural push is simply the low or the high that starts a break of structure and a big move. So when we're looking at this chart here, we see that price was trending down up here, but then from this high, this lower high is what pushed price to break all of these lows to the left here. All of these major lows, when we're mapping the major moves of the market, we've got a major pullback up here and then a major push down here. And this lower high is what sparked the break of all these lows because it pushed price down and out. Now, because this is the start of a structural push, when price comes back up to it, it's quite likely we're going to get a reaction. And that's exactly what we got here. We got big, big wicked reaction. Price exhausted very quickly and a lot, and then pushed down. And as you see, it's happening again. So actually with the start of structural pushes ones, we're going to be able to see generally all 3 of these together because the start of a structural push will nearly always be a fresh level because you'll spot this on the charts. But a lot of the time, for example, when price is moving, a lot of the time we're told that price needs to retest here in order to be a valid retest trade. It's not actually the case. Price can retrace all the way up to the start of the structural push and still be valid because this is still valid structure. We've not broken any structure up. It's still bearish structure. So a lot of the time, the start of the structural push will be a fresh level because that is the start of the structural push. It doesn't tend to come back all the way out there unless it's having a deep retest. We will often see wicks there because the start of the structural push will normally, for example, if we're looking for sells, will normally offer a lot of wicks, so show a lot of bullish exhaustion leading into the bearish turn that pushes price down. That's why we'll see generally a lot of wicks. As you see, we see wicks here, we see wicks on the retest of the structural push. And then, as I said, the fact that it is the start of a structural push is very useful because when we are retracing up like this, we know that now we're at the maximum point where price can retest and still be valid structural move. So if price breaks up here, it's now a bullish structure because we've broken structure up. So it needs to hold in order to continue that bearish structure down. So when identifying how strong a level is, and this is structural level, I'm going to look at these three things generally. I'm going to add those into our arsenal and they should become second nature. So thank you very much for listening. Please like and subscribe. I'll see you in the next video.